Welcome friends. Today in this lecture we will talk about the cost and the various concepts related to the cost. Let's understand what is cost. Cost is the amount which is paid or given when in order to get something. When you want to get something, you are paying some amount for that, and that is known as the cost. Here cost is related to the producer's behavior and not the consumer's behavior. When the businessman is producing any goods or the services, and the expenses they are incurring is known as the cost. There are various types of cost which the firm is incurring. So let's start with the various cost and the difference and the meaning of that. The first is the actual cost and opportunity cost. Actual cost is the cost which is incurred by the firm while producing goods or services. When the firm is producing any goods or services, they have to incur some of the cost, and that cost is known as actual cost. There are some examples of the actual cost, that is the raw material, the labor, wages, salary, etc. Rent on the borrowed money, the rent on the building, land, machineries, etc. So these all are the actual cost. Here actual cost is also known as acquisition cost or the outlay cost. Let's understand the opportunity cost. What is the opportunity cost? Opportunity is the cost it's a return from the second best use of a firm's resources in order to avail the best use of resources. When the firm is choosing the best option of the use of the resources, then they must have to forego the second best option. So the cost of foregoing the second best use of the resources is known as the opportunity cost. Let's understand this with the help of the example. For example, if the firm have choice to do one task with the help of machine A and machine B. For example, machine A gives the return of rupees 50,000, whereas machinery B gives the return of rupees 30,000. So obviously the A is the best use of the resources because it gives the higher earning, whereas B gives the lower earning compared to the machinery A. So it's the second best option. So when the firm is choosing the machinery A, the first best option, then they must have to forego the option of B. So it is known as the opportunity cost. Here rupees 30,000 is known as opportunity cost, whereas 50,000 is known as actual cost which is incurred by the firm. So this is about the actual cost and the opportunity cost. Let's understand the another concept related to the cost, that is sunk cost and outlay cost. Here outlay cost is the same as the actual cost. the cost incurred by the firm while producing goods or the services, raw material, wages, etc. So outlay cost is the actual cost, whereas sunk cost is related to the past cost and the cost which cannot be recovered. The cost which cannot be recovered is known as the sunk cost, and also it can't be altered by change in quantity. So the cost which cannot be recovered and cannot be altered by change in quantity is known as the sunk cost. The example of the sunk cost is depreciation. Depreciation cannot be recovered and it also cannot be altered by change in the quantity, and this is also related to the past. So this is known as the sunk cost and the outlay cost. The other type of cost is the explicit cost and implicit cost. Here explicit cost is also known as paid out cost, whereas implicit cost is known as imputed cost. Okay. So the explicit cost, the name suggests paid out cost. The cost which is paid out by the firm in cash is known as the explicit cost. For example, the cost of the raw material, wages, salary to the laborers, the rent paid, these all are known as the explicit cost. It is actually paid out by the firm. The second one is the implicit cost or the imputed cost. Here explicit cost is recorded in the books of account, and it is helpful to prepare the PLN account and to know the profit and loss of the business and to do the tax adjustment. So explicit cost is related in this area, whereas implicit cost is related to the theoretical, because it is not actually incurred by the firm. It can be defined as the cost. It can be defined as the earning from the employed resources which is of the employer. So for example, if the employer have land and they are using that land for the business purpose and not letting it out, that land, to the another purpose to earn interest, they are using that land into the business and not receiving any rent for that. So this is known as the implicit cost. It is actually not recorded in the books of account, but it have other option to earn something. So this is known as the implicit cost. The other type of cost is the opportunity cost and imputed cost. What's the difference or the similarity between these costs? We have understand the opportunity cost and the imputed cost. Opportunity cost is the foregoing the second best option in order to avoid the first best option. It is the chosen option and the rejection of the any option. So opportunity cost is related to the choosing best option and get the high earning or return on this. Okay, whereas imputed cost is related to, apart from choosing the best option, it is related to the rent which never received or paid, but the rent on the idle land. or the depreciated machinery which is still in the use. So this is known as the imputed cost. Imputed cost is the subdivision of the opportunity cost. The other type of cost is the incremental cost and the incremental cost and sunk cost. Here incremental cost is the cost, it's an addition to the cost. Cost is added into the account when the firm would like to change its nature and the level of business activity. When the firm is changing the nature of the business activity or the level of the business activity and they are incurring more cost, then it is known as the incremental cost. For example, if the firm would like to diversify, then they need extra machinery. So the cost of that is known as the incremental cost. Incremental cost can be avoided in case they don't have enough resources, or in case of the war time the firm need to produce or they concentrate on the one area only, then they can avoid this cost. So it is known as the avoidable cost. Whereas sunk cost is also related to the past, which we have already understand about the sunk cost, and which cannot alter by change in the quantity. By change in quantity, it is related to the past. So this is about the sunk cost and the incremental cost. Here sunk cost cannot be avoided because it is related to the past and it is already incurred. So this cost is also known as the non-avoidable cost. For example, depreciation is non-avoidable cost and it can't be even increase or decrease due to the change in the quantity. So this is known as the sunk cost. The another type of cost is the book cost and out-of-pocket cost. Here we have the another two type of cost, that is the book cost and the out-of-pocket cost. Out-of-pocket cost is, the name can assume from the name also, that is cash going outside from the pocket. So it is a cost when the current payment of the cash is known as the out-of-pocket cost. The salary, wages, rent, all are paid and this is known as the out-of-pocket cost, and it is recorded in the books of account. It helps to prepare the P&L account and to know the profit and loss of the business. Whereas book cost is not actually paid in cash. It is not actually paid in terms of cash, but the provision for this cost is made. For example, depreciation, we are not paying actual amount for depreciation to anyone, but we are making the provision for it and it is reduced from the P&L, profit and loss account. It helps to maintain the profit and loss account. So this is not actually paid in terms of cash, but the provision for this is made. This is known as the book cost. The other type of cost is the accounting cost and economic cost. It's a very important types of cost, and it both also have the relationship between. The accounting cost is also known as explicit cost. The cost which is paid out by the firm is known as the accounting cost, which is already paid in terms of cash. The example we have taken is the raw material, salary, wages, rent, etc. These all are known as the accounting cost, and these all costs are recorded in the books of account. This is known as the accounting cost. Here economic cost is the combination of the explicit cost plus implicit cost. In this, both the type of cost is recorded, that is the explicit cost and the implicit cost. This is known as the economic cost. Economic cost is related to the future. It helps to take the decision. It helps to making the decision process very smoother. And as it is related to the future, it helps to cut down the cost in the future also. So this is known as the economic cost. It includes the both explicit cost and the implicit cost. The other type of cost is known as the private cost and social cost. Here the economic activity or the cost we can define into the two level, that is the micro level and macro level. Private cost is under the micro level, whereas social cost is under the macro level. Private cost is the cost incurred by the firm while producing goods or the services. When they are producing any goods or the services and the cost is incurred, is known as the private cost, and it is borne by the business firm itself. Whereas when the firm is producing any goods or the services, but it has effect on society, and that is borne by the social people, that is a member of the society. So that cost is known as the social cost. For example, if the firm is producing more goods and it will create the greater pollution, etc., greater congestion, then the pollution problem is borne by the society. So that cost is known as the social cost, whereas the cost of producing that product is known as the private cost. So this is about the private cost and the social cost. Let's have the another type of cost, that is the direct cost and indirect cost. We have the another two type of cost, that is the direct cost and the indirect cost. The cost which is directly incurred is known as the direct cost, whereas this cost is not directly cost, but it is incurred indirectly. So this is known as the indirect cost. When the cost of producing one unit is known as the direct cost, whereas there are any other type of cost which is not directly related to the production of the unit. So that is known as the indirect cost. For example, manufacturing cost of the product is a direct cost, whereas electricity bill is not directly related to the manufacture for the production of the goods or the services. So this is known as the indirect cost. Then the other type of cost is the controllable cost and non-controllable cost. there are some of the costs which can be controlled or regulated by the executive. When the cost is controlled or regulated by the executive, then it is known as the controllable cost. But there are some costs which cannot be controlled or regulated by the executive, is known as non-controllable cost. Mostly the costs are the controllable in nature, but there are some of the costs which the firm or the individual business house can't be able to control. So that cost is known as the non-controllable cost. The another type of cost is the replacement cost and original cost or the historical cost. Here let's understand this with the help of the example first. Let's assume the business firm is take into existence in 2001. They started their business in 2001 and assume they have purchased machinery A at rupees 50,000. At this point, it's in 2014, the firm, again, this machinery is not in much use right now, so they have to replace it by the same machinery they would like to replace. But the cost of purchasing machinery A in 2014 is rupees 70,000. Okay. So here the same machinery is costed in rupees 50,000, whereas in 2014 it is at rupees 70,000. So 50,000 is known as the original cost or the historical cost, whereas 70,000 is known as the replacement cost. It is due to the change in here the change in price is due to the time period. Here the time value of money is affected and the price is changing. So this is known as the replacement cost and the original cost. The other type of cost is the shutdown cost and abandonment cost. When the firm is temporarily shut down their business or temporarily stop their production activity, then they are incurring some of the cost, and that cost is known as the shutdown cost. It can be reduced or it can be fully reduced by continuing the business activity. But at the time of the training, etc., the firm have to stop that production to give training to that employee, and the cost of incurring the sheltering the machine and the other is known as the shutdown cost. Whereas abandonment cost is when the all machinery retired at same period of time. It's all machinery retired at some period of time and they have to buy the another machinery. So that cost is known as abandonment cost. For example, the machinery which is used in the war time period is not useful in the peacetime period. So when there is the completion of the wartime period, they must have to replace it by the peacetime period machinery. So the cost incurred by the firm is known as the abandonment cost. The other type of cost is urgent cost and postponable cost. As the name suggests, urgent cost is the cost which must have to bear at the specific period of time. because it can stop the operational activity. To continue the operational activity, the firm must have to incur the urgent cost. For example, the purchase of raw material, etc. The firm have to buy the raw material to continue the production process. So this is known as the urgent cost. Whereas if the one product or the one material firm do not buy at a period of time, then the operational activity is not stopped. Then it is known as the postponable cost. Its operational activity is not stopped. So this cost is known as a postponable cost. We can buy that product or the machinery in the future period of time. For example, raw material, the firm must have to buy at a period of time to continue the production process. But if firm would like to replace machinery, then they can buy in the future period of time rather than now. So this is known as the postponable cost. The other type of cost is the business cost and the full cost. Business cost and full cost. Here, business cost include all the actual and explicit cost which is paid out by the firm, and it also include the book cost, that is the provision made for the depreciation, etc. So it is a combination of the explicit cost plus book cost. It is known as the business cost. Whereas full cost is the opportunity cost and normal profit. This is known as the full cost. The other type of cost is the marginal cost, average cost and total cost. When the firm, the total money value paid by the firm to produce any goods or the services, then is known as the total cost, the total money value. This is known as the total cost. Whereas average cost is the per unit cost. Here assuming that the cost of the product is similar for every product, so the per unit cost is known as the average cost. Whereas marginal cost is when the firm is producing the additional unit, when the firm is producing an additional unit and the cost incurred for producing that additional product is known as the marginal cost. So it is about the marginal cost, average cost and the total cost. Let's have the another type of cost, that is the fixed cost and variable cost. The cost which is not vary by the change in the output. When the output production is increase or decrease, it doesn't vary. The cost does not vary is known as the fixed cost. Whereas the cost which varies with the production or the output is known as variable cost. For example, raw material or the salary, wage payment. When the firm is producing more output, they have to buy the more raw material and the cost incurred is high. So this is known as a variable cost. Whereas the fixed cost are the electricity cost, whether the production is 1 unit or 10 unit, the electricity cost is similar. So this is known as the fixed cost. The other type of cost is the short run cost and the long run cost. Short run cost and long run cost. In the short run cost, the fixed cost doesn't change, it remains stable. So it includes the fixed cost, and there are also some variable cost which is incurred by the firm. So short run cost is the combination of the fixed cost and the variable cost, whereas in the long run the production process can be changed and there are some incremental cost, and the machinery which is fixed in nature, they can also change. So in the long run the firm have the variable cost only. So short run cost is a combination of the fixed cost and the variable cost, whereas long run cost, which is incurred in the long run period, is known as the variable cost. The another type of cost is the incremental cost and marginal cost. Here we have the understanding related to the both the concept. Incremental cost is the additional cost incurred by the firm when they are changing the nature of the business activity. When the firm is changing the nature of the business activity, and the cost incurred by them is known as the incremental cost, whereas marginal cost is the cost of producing additional unit. The cost of additional cost that is due to the production of the additional unit. So marginal cost is related to the additional unit, whereas incremental cost is related to the whole business activity. So it is related to the business, whereas incremental cost we can't divide per unit, it is for the whole business. So this is about the various types of the